Hello traders, you are welcome back to the Forex Geek channel. In this video, we are just going to be diving into one of the most powerful trading strategies you can use, and that is the EMA and RSI strategy. This method is perfect for identifying trends, catching pullbacks, and making smarter trade decisions. So make sure to stick around until the end because I'll be showing you exactly how to use this strategy in live market conditions. And if you have not already, hit that like button and subscribe to the channel so you never miss a new trading video. So why do we use the EMA and the RSI together? Well, the exponential moving average is great for spotting trends, while the relative strength index helps us gauge market momentum. So when we combine the two, we get a system that allows us to confirm strong entry points and avoid false signals. So the goal here is to trade in the direction of the trend and enter at the best possible price. All right. So let's just quickly break it down step by step. The first step is to identify the trend with the EMA. We are going to be using the 50 and 200 EMAs for the purpose of this video. All right. The 50 and 200 EMAs we're going to be using in this video. All right. So when the 50 EMA is above the 200 EMA, we are in an uptrend. Very straightforward. Okay? It's as simple as that. On the other hand, when the 50 EMA is below the 200 EMA, we are in a downtrend. Then the second step is to confirm the entry with the RSI. So the RSI helps us avoid bad trades by showing us if a market is overbought or oversold. If the RSI is above 70, the market might be overbought, meaning a reversal could be coming. But if the RSI is below 30, the market is oversold, signaling a potential bounce. But we don't just blindly trade based on RSI, we use it alongside the EMAs. Okay? Now, the third step is executing the trade. In an uptrend, like this particular example, we wait for the price to pull back to the 50 EMA. You can see that at this point, the price actually went above the EMA, right? But that's not the time to enter. You wait for a pullback to the EMA first. Once that pullback has been validated, then you check if the RSI is near or below the 50, but not in the oversold zone. The RSI must not be in the oversold zone, okay? If the RSI is near or above the 50 level, but not in the if the RSI is near or below the 50 level, but not in the oversold zone, then you can, look out for good opportunities. That's a strong confirmation for a buy. In a downtrend, we wait for price to pull back to the 50 EMA as well. All right, let's look for a good example of a downtrend. Okay, you can see that here. All right, the 50 EMA has to be below the 200, of course. You can see. Then you wait for a pullback to the 50 EMA. Then, of course, you look for continuation around here. All right. You wait for the price to pull back to the 50 EMA, and then you check if the RSI is near or above the 50. Make sure that the RSI is near or above the 50. In this case, it was above the 50. All right, but not in overbought. It should not be in the overbought. Okay, that's a strong sell signal. We always place a stop loss below the recent swing low for a buy and above the recent swing high for a sell. So once you have confirmed your entry, you can enter, set your stop loss above the recent swing high. Your take profit can actually be around key support zones, but aim for a risk to reward ratio of at least 1:2. All right, 1:2 minimum. Okay, should be your target. So that is a sell. Then for a buy, of course, once you have confirmed your entries, you've confirmed your buy move. Once you've confirmed with the moving averages, the RSI, and even candlestick patterns, so if you want to enter a buy, set your stop loss below the recent swing low, and then you can target key resistance zones for your take profits. Aim for a risk to reward ratio of at least 1:2, but make sure that your targets are realistically set. Okay, your take profits for your buy trade should not surpass a key resistance, and your take profits for your sell trade should not surpass a key support. All right. Now here are some extra tips to make this strategy even stronger. One, make sure you stick to the trend. I know that there are some traders who like to trade against the trend. There are some traders who like, taking advantage of counter trend strategies. Maybe you're trading a pullback or something like that. But I will recommend that you only take buy trades in an uptrend. For example, in this uptrend, we should be looking for only buy trades. In this uptrend, right? You should be looking for only buy trades. Take only buy trades in an uptrend. All right, you can enter after pullbacks. Then in a downtrend, you should be looking for only sell trades. You take only sell trades in a downtrend. It's very important. All right. Then also use higher time frames. In addition to sticking with the trend or sticking to the trends, you should also use higher time frames for your initial analysis. Okay, the 1 hour charts and the 4 hour charts provide stronger signals than lower time frames. It's not like you cannot do analysis on lower time frames, but like I always say, the analysis done on the higher time frames are usually stronger than those on the lower time frames. So even when you want to scalp, it's good for you to just get an overview, a general overview of what the market is saying on the higher time frame. You go to the 4 hour chart, just look at what is happening. Is it a bullish trend? Is it a bearish trend? Is it a ranging market? Get a general overview from the higher time frame. Then you can go back to the smaller time frame and look for precise entries. So that's actually a good way to trade. That's a good way to trade. Okay. And make sure to combine with price action. You look for candlestick patterns. For example, if you have a buy signal from the moving averages and the RSI, look for a bullish candlestick to support it. You are looking for high probability trades. That's what your focus should be on. If you want to enter a buy trade, I always say that you should not neglect support and resistance zones. That is one. For example, now I just saw a good opportunity here. This is a resistance zone. We had a breakout, right? At the time of this breakout, look at the RSI was already close to the overbought, but it was not yet in overbought. It was above 50. It was above the moving averages. Good. Above 50. Good. Not yet in overbought. Good. And then you can see we had this rejection candle here. We had this rejection candle here. You can see there is a pin bar here. There is a doji here, a doji here. So we had candlestick patterns that were supporting this bullish move, right? So after that, it was a good time to enter a buy. Set stop loss below the recent swing low. Take profit can be at key resistance zones. Aim for a risk to reward ratio of at least 1:2. Okay? So basically, always pay attention to price action as well, in addition to the signals given to you by the indicators. That's what I'm trying to say. So if you follow these rules, you will drastically improve your trade setups and avoid unnecessary losses. That is it for this strategy breakdown. If you found this video helpful, make sure to smash that like button and subscribe to the channel for more game-changing trading content. Also, let me know in the comments if you've used the EMA and RSI strategy before, or if you have any questions. Thank you for watching, and I'll see you in the next video.